If you want to learn how I catch high risk-reward ratio moves, like this one that explode in a matter of a few candles, then watch the video. Hello and welcome to a new price action video. Today we will be looking at one of the coolest tools I have in my toolbox, which is the Andrews Pitchfork. So what is the Pitchfork? It's a tool for you to find great entries into the market, and it also has exits pre-planned. And it's quite easy to set up actually, as long as you can read basic swing highs and swing low structures. So the first thing you need to draw a pitchfork is a low, then a high, and a low. Or obviously for a short, you need a low here, a high here, and then a low, and then a high. So those are your potential pitchforks. As soon as you think that the point C has formed, you are looking for long entries in this case, of course. And the long entries come when we hit the outer white line together with price action confirmation, and our take profit is the middle of the pitchfork. So in this case we bounced here from point C, then we came back into the outer line and we made a bullish outside bar on the 1 hour chart. This was confirmed by a level, so you always need level confirmation, and your take profit is here at the red line. And your stop loss would be either below the bar, or if you want to be safer, below point C. Now the cool thing about the pitchfork is that as price moves, the target will also move. So in this case you would have made 2.6, whereas initially you were only targeting 1.9, or initially targeting 3, and then you get 4.2 in the end. You can also only take half profit here and then let the rest run and try to take profit here at the upper boundary. Another indication that the pitchfork is confirmed is when price reacts to these inner lines here. So that's also, even before you get your entry down here, a potential confirmation of the pitchfork. So let's take a look at another example. So here's an example on the GBPUSD. We had a nice up move here, which is our first leg. And then we had the pullback, and often the pullback goes to the 38.2 or 50 Fibonacci levels. And when that happens, you can draw your pitchfork then here, point A, B, C, and then we get the bounce from point C. And how do you confirm whether point C is confirmed or not? Well, firstly you got the bounce from the green line here, then we move back into the white line, we bounce a bit outside of it, but then we move back in. If we take a look at the level situation, we have a strong level here on the hourly, which is more of a zone actually, and we are bouncing from this level. So as we move back into the pitchfork, we can take our trade here with our stop below this low or below the ultimate point C, take profit up here at the red line for 2.3, but eventually it became a 3.2821. Then what happens is that we start moving out of the pitchfork, and as soon as you move out of the pitchfork, you can draw a new one. So that goes like this first, obviously. And what happens when we come back into the white line? Well, we test it together with the level on the 1 hour. Your entry would be here. Here, obviously, if you choose a stop all the way be above point C, you wouldn't get any decent risk-reward ratio. Also, the pitchfork was already confirmed by the move into the white outer line here, and then the move back into the upper white line. So we put our stop above, take profit at the red line, so 1.87 planned, and eventually we break through it for 3.8. Here is another example on the New Zealand dollar US dollar on the 1 hour chart. You can use this on any time frame you want. I typically use it on the 1 hour, the 4 hour charts, together with my pullback strategy. So if I'm trading a pullback into the 38.2 or the 50 fib retracement, I also start looking whether I can draw a pitchfork and take additional entries along the way. Ideally, your wave A makes a higher high as well. So you have the breakout here, and then if you follow Fibonacci theory, for example, this would be your wave 3. So this also helps. Here in this case, you have a really steep pitchfork and a really narrow one, so it's not really applicable. You always want it to be kind of flat in relation to the chart, so slightly angled. In this case, we cannot make it work with the traditional, so we can use the shift, for example, which fits nicely, and the modified shift fits even better in this case, right? If you want to know how these work, simply Google it. It's quite straightforward. But if you want to stick with the original one always, you cannot apply this here. So then what happens, we get a second point C actually. We pull back into the same level, and this makes this pitchfork much more tradable. We do have a level here, and as soon as we bounce back onto this level and we start moving back up, we do have an entry with our stop below and our target up here. So that's a 3.4 to 1 roughly. Didn't make it there, then you have to apply your trade management. Obviously, once you are at 3.9 or 4 to 1, you don't want this to turn into a loser. So in this case, the pitchfork was not confirmed by hits on the lines before we move back into this point, but we do have a strong level. So we want to try to take this long here when it rejects, but it doesn't work out. Obviously, nothing is fail-proof, but you do get some nice entries with this strategy. Then you draw your new pitchfork, A, B, C. We move down along this channel, pretty much confirms the pitchfork. We came back up into the white line and exploded down into the red line, into the middle of this channel. And there are many other potential ways to enter trades with the pitchfork. For example, from the green lines when we have a decent level, back into the red line if you can get a good risk-reward ratio or even higher. Here eventually we broke out of this pitchfork to the upside, so the price became parabolic here eventually. Here we bounce from a level in the red line, so in this case this is a bit of more of an advanced entry. You can take your entry here, would target the white line, but understand that the higher you go in the pitchfork, the more extended price becomes. So it's usually always better to buy down here and at these points, and buying above the red line becomes definitely trickier. So here's one more on the GBP SEC, a bit more of an exotic pair. We do have our wave 1 here. We made a lower low, so this is a breakout wave. So this is A, B, C. Then you get your pullback to Fibonacci level 50. And that's where we hope that point C is confirmed. And it's confirmed after we move down from here and react to these green pitchfork lines. So when we come back up and we make the pin bar here on the 1 hour, that's a perfect signal for us to get in. Again with the take profit down here, 4.7 planned, eventually becomes a 5.6. And my favorite trades are definitely the ones that reverse a long trend. So here we have an extended downtrend on the GBPUSD, and then we have an initial breakout to the upside, taking out this high here. So there's a trend change on the 1 hour. Then we move back into the FIB 61 level, and this is where point C becomes confirmed. We then make 3 bounces from the white line. So there's a potential entry here, potential entry here, and here. This one is more obvious. These are more advanced down here. This one is more obvious. We do have a level here as well in the vicinity, right? And you can always get nice risk-reward ratios from these trades. So they are pretty cool. And of course, fitting the pitchfork is also a bit of an art. You have to see how the channel lines up best with the price action, where does it get the most confluence. And then you can, of course, when price gets here, you could also go down to the 5-minute charts, for example, to fine-tune your entry. Stuff like that is definitely possible. It's simply a tool, a framework that you can base around your trading. So I'm doing breakout trading and pullback trading, and this is a strategy that is based around pullback trading, but it can also be used for breakout trading. For example, if you have a breakout down here from this whole structure and you get in here with your target up here, that's also a great trade. And you can see that it all goes hand in hand. It's Elliott wave theory, Pitchfork, Fibonacci's, pullbacks. It all works as a team, basically. And the more you can stack in your favor, the better. And in my opinion, the best thing about Pitchfork is simply that it gives you clear entries here, Confluence with levels and the outer lines, and clear take profit, which makes it a great tool to use also for beginner traders. That's it for this video. I encourage you to play around with this a bit. It's a really great tool to have in your toolbox if you know how to use it. It helped me to get into a lot of nice trends. Thanks for your time and see you in the next one.